I've talked about this on several different videos at this point, so I figured I'd go ahead and make an entire video about it. What I'm referring to is the fact that the Goldman Sachs Nasdaq 100 Core Premium Income ETF, or ticker symbol GPIQ, an ETF that is somewhat newer to my personal portfolio, does have the possibility of outperforming JEPQ over the next several years, in my humble opinion. Now, there's a very specific reason on why I personally think that GPIQ is a better investment option for dividend or income-focused investors, especially for investors like myself that have previously been buying a ton of JEPQ. And in this video, I'm going to go through and explore exactly what this ETF is, how it works, and what that main reason being is. So if you're a dividend income focused investor, especially if you currently hold on to JEPQ, well then stick around for this GPIQ video because you're definitely not going to want to miss it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, just to go over some of the basics, I'm sure some of you guys are watching this video saying, what are you going on about when it comes to GPIQ? Maybe you haven't even heard about this ETF at this point. What I'm referring to once again is the Goldman Sachs Nasdaq 100 Core Premium Income ETF, which hasn't been trading for all that long and hasn't been in my portfolio personally for all that long either. Now, this ETF's overview is very familiar. It says seeks current income while maintaining prospects for capital appreciation. Nothing necessarily groundbreaking in the objective, but as we read on in a second, you're going to understand exactly what I mean and why this ETF has the potential to do so much better compared to a lot of other premium income ETFs across the markets. Now, what I mean by this is it says number one, seeks consistent monthly distributions, aims to generate a consistent monthly distribution rate, generally from option premium and equity dividends. Now, this is one of the main things I like about GPIQ compared to JEPQ, is the fact that this ETF overall since inception has paid a consistent amount of income per month, and even with volatility being all over the place at times, this ETF's income has been very steady. But here's the main reason, this is the main reason I want to make this video, because I want to dig a little bit deeper into this main aspect. It says core equity exposure with lower volatility provides core equity exposure to the Nasdaq 100 index and dynamically sells call options, allowing for participation with rising markets and potential outperformance in negative to flat markets. Now, as we see in the objective, this ETF's main goal, number one at least, is to see current income while also maintaining prospects for capital appreciation. So sort of rule number one, this is going to be a premium income ETF. It's not a growth ETF by any means. This ETF's main objective is to generate income. But with that, some of us investors also want to see some growth over time, especially in the context of comparing GPIQ to JEPQ, because this ETF specifically has not only provided around 8, 9, 10, 12% per year in income as far as yield goes, but has also offered some upside on top of that. Now, the reason this ETF really stands out to me is because it dynamically sells call options. And shout out to the gaming dividend over on Seeking Alpha. I came across this article where they broke it down elegantly. They say right here, GPIQ sells options against some underlying equities, but does it in a dynamic fashion. Instead of a formulaic approach of consistently writing options against 100% of their portfolio, like JEPQ does, for example. GPIQ, on the other hand, can dynamically adjust the rate at which they want to write options between anywhere from 25 to 75%, making this ETF more dynamic and more customizable. To understand why this is beneficial, investors must understand that an option strategy will always cap the upside price appreciation that can be experienced. So when you're selling options against 100% of your portfolio, what that's going to do is basically ensure that if the underlying rips within a certain time period, the upside is only going to be able to go so high and is going to be capped within a certain range. But with GPIQ, because only 25% to 75% of this entire ETF is going to be overlaid with options, there is much more upside. Now, they then said, in an effort to visualize this, let's imagine that GPIQ holds an asset priced at $100 per share and writes an option against the underlying asset with a strike price of $105 per share. If the underlying asset appreciates in value to $120 per share, GPIQ's option will only be executed at the strike price of course, $105 per share, effectively sacrificing the remaining $15 worth of upside growth that was experienced in that time frame. Therefore, GPIQ will always underperform from a price growth standpoint against more traditional ETFs. But the beauty of the dynamic feature is that GPIQ doesn't have to always write options against a large bulk of their assets. If the technology sector continues to see a strong bull market, GPIQ can let those assets ride the wave and won't utilize an option play against those equities. This would allow GPIQ to experience the full upside of these holdings without disruption. However, if markets are moving sideways for an extended period of time, GPIQ can crank up the amount of options and pending so that a higher amount of premiums are collected, which can potentially offset the sideways movement. So like I said, when I first came across GPIQ, I love the fact that they sold options dynamically. And this is basically coming from an investor that has a large portion of my overall portfolio in things like JEPP and JEPQ, which I've honestly loved holding over the past several years. And for me specifically, there's lots of different positions in my portfolio that I don't mind if they trade sideways or even down a tad. Take something like QYLD, for example, that's basically traded sideways since I held on to it, but it's paid me around 12% per year in dividends. But there are certain areas within my long-term portfolio that I don't only want to receive income from, I also want to see some potential upside. Now, just because I want to see some upside doesn't mean that I want to necessarily invest into the NASDAQ 100 by itself. I still want to do so and gain exposure in a premium income setting. But because this ETF does dynamically sell call options, and it only does so with 25 to 75% of the entire fund, that gives this ETF not only the potential to generate a consistent amount of income from those juicy option premiums, but also able to grow consistently over time, of course only if we're in a bull market. Now, with that being said, if you do think that the NASDAQ 100 is going to trade sideways and or down from here, well then maybe it's not the best time to buy into an ETF that does dynamically sell call options on only a portion of the underlying. But for me personally, I do think that the NASDAQ 100 over the next 1, 2, 3, 4, 5 years is probably going to trade sideways down a little bit, but up a lot more, which is why I think GPIQ can easily outperform other premium income ETFs across the market, at least if you ask me. Now, I know what some of you guys are probably saying, okay, we get it. We get the fact that this ETF sells options dynamically, and there's much more upside compared to potentially something like JEPQ, but how much income does this ETF pay consistently per month? Now, at least historically, over the past several months, this ETF has paid anywhere from around 39, 38 to 43 cents per share per month, which is not bad whatsoever. And honestly, as the years go on, the more and more years that I stay invested in the stock markets, the more I sort of want the best of both worlds, and the more and more I'm interested in different ETFs and even stocks for that matter, that offer a nice amount of income, but also offer a nice amount of growth. Names like Devo, for example, have also been recently on my daily buy list because that ETF also offers around 5% yield, but also offers some growth potential too. So if you're an investor out there, let's say, that wants exposure to extreme growth potential, or if you're an investor out there that wants to earn 20 to 40% yield in income per year, well then GPIQ probably is not going to be the right ETF for you. But if you're an investor out there like me that wants to earn 8%, 9%, 10% per year as far as income goes, but also wants some exposure to some upside, then GPIQ might be one of the best ETFs I've came across in a long time. Now, I know I've been sort of comparing GPIQ to JEPQ, and JEPQ in my portfolio as of right now is a much larger position. And this is just simply because I've been buying JEPQ a lot more over the past several years, but I fully intend to make GPIQ a much larger holding in my personal portfolio throughout 2025 and beyond. Now, I also find it sort of interesting that if you stack up GPIQ next to JEPQ, for one, they both have done very well over the past 1.2 years, which I guess is a very short time frame to even look at. But GPIQ's offered almost 43% total return, where JEPQ's offered around 41% total return. Now, in the longer term horizon, I kind of think that this is probably what things are going to look like. I think JEPQ is going to do very well over time, which is why, like I said, I currently own so much of it. But if you were to ask me, I honestly think that GPIQ might consistently outperform JEPQ just by a tad. So I hope that after going through this video and sharing with you guys more details about the Goldman Sachs NASDAQ 100 Core Premium Income ETF, ticker symbol GPIQ, I hope that you guys have a much better understanding of what this ETF is and how it works, and why a lot of investors as of right now are very excited about it. But I thought I'd make a video and sort of break down one of the most important aspects, in my opinion, of this ETF, especially when you're comparing it to other premium income ETFs across the market, because GPIQ is very different than a lot of the others. But now, before I go, I have one last question to ask you guys down below. Are you personally intrigued by the fact that GPIQ offers a dynamic call option strategy? Let me know what your thoughts on GPIQ are down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.